Well, stock futures are falling this morning after the Dow and S&P 500 suffered their biggest one-day drop since 2020. The massive market sell-off happened after earnings reports confirmed inflation is changing consumer spending habits. So with us now to discuss these changes is David Bahnsen. He is the founding managing partner and chief investment officer of the Bahnsen Group. Thanks so much for joining us. So let's talk about this. What did we learn in the retail report and that was released? What is so concerning?
Well, I think those particular reports were concerning in the sense that generally you think of a Walmart and a Target as being the places that have the best pricing power. They can pass on impact to customers the most. They have a lot of low price items, and generally those stores have not seen a big hit in a downturn. Well, their sales numbers were actually fine, but it was that the transactions were lower, and yet there was a higher ticket charge. And so it shows that consumers are changing their habits, their sort of buying patterns, and most of it does appear to be inflation driven.
So then what are we expecting to see as more corporate earnings reports come out today?
Well, the bulk of the corporate earnings season is pretty much done. About 97% of the S&P is released. There's still a couple more coming in. Cisco released last night, and they're going to open way down this morning. So you do have some companies this earnings season that have had a very difficult quarter. But the truth is you've had a lot of companies that had a very good quarter. And so it's one of these market environments where it's not been good for the indexes, but it's been very good for some active managers, people picking certain spots, particularly in energy, healthcare. And until this week, consumer staples had been doing really well. They're now hurting. But I think people want to be more defensive.
So then I guess the big question is, where's the bottom? I mean, how much lower can the markets go?
Well, I would answer that two ways. I think that the NASDAQ, the tech stuff, the things that have done really well but are really quite expensive, history tells us they can go lower than we think. They can drop a lot more because they were so expensive. They had had such a big run up. The overall broader market, value stocks, Dow type stocks, I suspect they're closer than not to an end. But timing these things is very difficult, and investors are usually best off not even trying.
When it comes to the markets, for most people, it doesn't impact their day-to-day lives unless you're like on the verge of retiring and your 401k is looking pretty dismal. But gas prices do. So gas prices hit another record high this morning. How are we seeing this impact the markets?
Well, I don't think gas prices are affecting markets other than that they've really helped the energy sector because there's very big margins. You know, the daily demand right now for oil is basically around the same as it was in 2019. It isn't like demand has skyrocketed higher. It's just simply that supply is lower, that we're not producing enough oil. And there's a number of reasons for that. But you're right, it does tend to hurt lower income people the most, and because it's a higher percentage of their monthly pay. And so whether it's food or energy, those are they have the function of being a regressive tax. And we just have to hope that there's price relief, but it's not going to come from decreased demand. It's going to come from increased supply.
What's your feeling about whether or not we are tumbling toward a recession?
My belief is that we will end up seeing a recession if the Fed sees this all the way through, but not until late next year or even early 2024. And the reason I say that is that I just don't think the ingredients are in place to totally pull the GDP metric, the way they measure it, into negative territory. But I do think that if they are to continue going forward to where it hurts corporate spending, business investment, that will probably become recessionary. But I think it's a ways out. Unemployment is still very, very low. There's a lot of room there before you start seeing that impact the overall economy.
David Bahnsen, thank you very much.
Thanks for having me.